Hello, everybody. Welcome. Let's get started right away. Tesla stock is down 3% today. Markets are struggling quite a bit. Um, Tesla stock is down 3.3%. Overall markets are also down quite a bit today. Give me 1 second. S&P 500 is down 2%. Russell 2000 is down 2.2%. NASDAQ is down 2.6%. Dow Jones down 1.6%. Across the board, all sectors, most sectors are down. Healthcare and utilities are up today. Healthcare and utilities are up. This is very much a risk-off type of trade today. Um, Yields are also confirming that. Yields are down substantially after today's PCE print that came in higher than expected. PCE, personal consumption expenditures prices index, came in at 0.3% versus expected 0.3%. Core came in at 0.4% versus expected 0.4%, and higher than the previous reading of 0.3%. So, as far as the Fed is concerned, the inflation problem persists. Inflation is elevated and is stickier than thought. The year-over-year inflation figure has jumped, and the 3-month annualized, 6-month annualized numbers are higher than before. So this is a really bad, combined with inflation expectations also rising, according to the University of Michigan Consumer Sentiment Index. For March final reading came in lower than expected consumer sentiment, but inflation expectations surged higher. So this is a major problem as far as the Fed is concerned. Interestingly, the markets are still pricing in a 20% probability of a rate cut, a 20% probability of a rate cut for May, which is stunning to me. But let's see what Stephen has to say. Stephen, how are you?
Good. How you been?
I'm good. What do you think of this macro economy, man?
It seems like the data interpretation is going to be hard because of all sorts of tariff news, front running of imports, things like that. But I don't know. My view and thesis hasn't really changed much. Inflation continues to be stickier than people expected, and I always kind of thought that the 2% core PCE was going to turn into more of a floor than a target. And it's kind of cool to look at a 10-year chart of core PCE, and you can kind of see how before COVID, they couldn't ever really get core PCE up to 2%, and now they can't really get core PCE down to 2%. So, not much has really changed from that thesis perspective the last, let's say, 3 to 6 months.
What do you think is the probability of a rate cut in May, which is in 40 days?
10%, maybe 15%.
Yeah, that's what the market is pricing in, but man, I just don't see it. I don't see how that's possible. James Brouillard today came out in a Bloomberg interview and said the probability of the rate hike has increased. The probability of a rate hike has increased, he says, and um, he says he doesn't see a rate cut at all until at least June, maybe July, and possibly until next year. What do you think?
I think the markets are a little bit more volatile right now, and so that's why I think pricing in a 15% rate cut is appropriate. I think the chance of a rate hike and a rate cut are elevated, just because before Trump was elected and before they were trying to make some of these changes, the macro is maybe a little bit more predictable. But because there's a lot of changes happening, I think people aren't really sure if it's going to be inflationary, if it's going to be deflationary, how markets will react. So I think both the probability of a cut and a hike should be elevated compared to what they would have been 3 to 6 months ago.
Okay, interesting.
Similar to how like options pricing in the market increases when volatility rises, right? So all else being equal, if there's more volatility in the market, I think the pricing for cuts and hikes should be higher.
Hmm. Um, What else is on your mind?
Um, Housing continues to look. There's a lot of inventory building in the housing market, so that's kind of what I've been following recently. Um, I still think that the sentiment appears to be extremely bearish out there. So I've been kind of looking for a bottom um, or a temporary bottom in stocks here the last week or two. We'll see if it plays out, but um, yeah, it just seems like everybody is expecting kind of the worst case scenario to play out. So similar feelings to fall of 2022.
Um, I don't know. I don't know. I think sentiment surveys look kind of similar, but this thing with sentiment is that once it turns negative, it can persist for a while. It can get worse. I think people are jumping to conclusions about kind of calling a short-term bottom here for the markets. Are you still expecting no housing price? Um, are you still expecting, kind of flattish housing prices this year?
Yeah, I don't expect if there is a decline, like I'm still in like the -2% to +2% in housing as far as
Yeah,
prices.
yeah, I don't know. I know. I think the bottom is falling out of the housing prices, honestly.
What's kind of your take on is your macro thesis still about the same as I think we said we were going to check back in like late March. I said as I was going to check back in with how you thought the markets and the economy and stuff were evolving as a whole.
Yeah. Um, so obviously, I had expected recession to start by now. Um, Even though the GDP now shows, kind of flat. So GDP growth has slowed down substantially. Um, I think recession may have started, but it's kind of curious. I talked yesterday. The initial claims has been really tight ranged in the last several weeks. They're between like 223,000 to 226,000. I mean, the probability of that being true, despite all the uncertainty and volatility in other markets, and the surge in challenger job cuts last month is highly unlikely. So I'm like really surprised how flat the initial claims are. What do you think?
I encourage you to look at the not seasonally adjusted graphs. And if you took off the labels, I would say if you look at those graphs, because it's probably just the way they're trying to account for the seasonality changes. But if you look at the non-seasonally adjusted unemployment claims, they're usually falling in the spring, and that's what it looks like now. So I don't really see anything uh, abnormal. It looks very similar to the last few years on how that goes. So I'd encourage you to look at the non-seasonally adjusted chart.
And I did look at non-seasonal adjusted charts because there's a lot of posts about it, but I'm not a big fan of kind of counting out seasonal adjustments. I mean, those seasonal adjustments are there for a reason. And um, but you didn't answer the second part of my question, which is challenger job cuts surged last month, and yet we don't see. So these are job cut announcements surged, and in part because of government Doge kind of stuff. But even if you exclude the government stuff, the private job cuts announcements have also surged, and highest in I forget in how long, but a long time. And it's not just last month. The month before that was also elevated for this time of the year. So, and yet we're not seeing initial weekly claims rise yet, and that's despite the fact that job additions have been low in recent months. So it just doesn't add up in my mind.
Do you believe that, like, my belief on that is that there was like slack in the labor market, and during COVID, we saw a huge rise of job openings because demand was pushed so much because there's obviously extra stimulus and extra money kind of throughout the economy. And as that kind of tightened down, then we saw job openings fall quite a bit. But even after job openings have fallen, I still think they're like people's personal balance sheets and stuff are good. Even after the challenger job cuts announcements, I think that's going to take some time to work through the system. So I don't think you'd see any of that stuff show up until like the second half of this year, because I think people are still going to receive like separation payments and things like that. So any of that stuff would be like a Q3 story for me.
Okay. Let's do a coffee bet on that. So in the last 4 weeks, initial record claims seasonally adjusted have come in between 223,000 and 226,000. And I suspect you think it's going to be basically at this level. So would you take maybe a reading above 250,000, seasonally adjusted reading out 250,000 in Q2?
No, I think there's a chance that it could hit 300, but I still think like anything below 300 or three and a quarter is still really low historically. So I don't think there's really any worrisome signs until those jump above, let's say, 325.
I mean, I think that's too late. That's too late because when was the last time they've been above 300,000? It's been like 5 years. What are you talking about? You know, I think the highest, like probably maybe May 2022, they went above 300,000. Let me just check real quick. Let's see. Initial claims, 5 years in May 2022. They were at, oh, not even 210,000, even in May 2022. Isn't that when the whole world was going to hell in a bandbasket because of regional banks? Remember the old podcast guys
I thought that was 23.
sounding. Oh, was it 2023? Okay, so May 2023,
Yeah, it looks like it
they
didn't.
went up to
Yeah, I would take.
258,000, 260,000. And the all-in podcast guys were like, "There's gonna be lines outside of the bank branches, and our financial system is going to hell, and blah 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 blah." Just give me a fucking break. They were so wrong. And the thing about those guys is like, doesn't matter how wrong they are, they never admit they're wrong. Never. And I think this is the problem with most people. Anyway.
So yeah, I'd take. I mean, I think we could see some like I wouldn't be surprised if they increased to 265 or so. But so I'd take under 300. But
Well, the thing though is, we had a 20% bear market in early 2022, which kind of resulted in this. Hold on one second. Let's see. In early 2020, we had that, and then a year later, we had the regional banking crisis, or whatever you want to call it, when people were like, I mean, even people came in here sounding the alarm, like trying to push the panic button in my spaces. What assholes? Um, so, so you think that we're not going to see that? So you're expecting a recovery in the GDP growth here, and you're not expecting initial weekly claims to rise above that. So I think 250,000 is a reasonable threshold here.
there's I'm not taking that coffee bet. I mean, my views are similar to what Bill has said publicly, that I think um, we could see a pullback here in Q1 GDP, and I think Q2 GDP will show a much higher reading.
Um, okay. I mean, I don't know. Like, if you can't take this one, like if you can't take a threshold that hasn't been breached since October 2021, when people were worried about second wave of COVID, I don't know how.
I think you can like I can say that I think there'll be softness in the labor market without there being a recession. So that's my belief. I think like it wouldn't surprise me if the number hit a high watermark, but just because it might go above 250 or 275 doesn't mean that we're heading into a recession.
Okay. Man, look at this CoreWeave IPO. What do you think about CoreWeave? They were supposed to be at 47 to 52 or $53 per share. So essentially $50 per share. They were trying to raise $3 billion in the IPO. And this is essentially a company that buys NVIDIA GPUs and rents them out. And NVIDIA has like a minority stake in them, etc., which is like super fishy. And then they tried to go IPO. They did a roadshow. They had to lower their price range twice, and then they ended up being 40. And Nvidia said, we're going to anchor it at 40 by buying $250 million, which is another level of shadiness. And it just started trading at $39 per share now. What do you think about this? What does it indicate to you?
Um, I don't have super strong opinions on CoreWeave. I think I like echo some of your sentiment that I think there's like some weird stuff going on potentially. Like I don't think it's like illegal stuff, but I think Nvidia is just trying to show like continued market strength and continued demand for AI. And so if I was in their position, I'd also probably try to backstop that IPO a little bit. So I don't think what they're doing is irrational, but I think it does raise concerns that, hey, does this mean that the demand for chips and stuff isn't as strong as it was 3 months ago? Yeah, I think that's a valid argument too.
Yeah. Um, I think this is the last shoe to fall. Yeah, I'm a little surprised that if you haven't yet turned more negative on housing market. I mean, we're seeing price cuts at highest since Great Recession for this time of the year. Inventory is rising as well. Number of sellers are rising now, and I think the economy is on the verge of a recession if it hasn't already. Also, I told you about some of the early indications I kind of track and talk about and everything, and some of those early indications show in the last um, few days here, the economy has really taken a downturn. And James Katz also posted that U.S. demand for Teslas is very low, and now even the most optimistic housing forecasters like um, what's his face, Altos guy, he's also kind of starting to sound cautious, and he sees a bit more data than he obviously posted in the presentation. So yeah, what do you think about that?
Well, I think there's two sides to the housing story, and I think like macro weakness that could push down rates. If let's say for example the long end of the curve came down and that pushed down mortgage rates, I think that there's a lot of demand that is kind of on the sidelines that's waiting for a little bit more affordable housing. So I think my thesis is that housing will continue to move sideways, and that's kind of been my call for the last 2 years. Is that from we'd see a decline in real home prices, but nominal would stay kind of flat, and that's kind of what's happened since really summer of 2022 when the rate hike cycle started. So a lot of my thesis just comes around. I think supply will come as rates drop. So I think there's kind of a floor as far as maybe if prices fall 1 to 2%, but I don't expect any large 10% or 15% home price correction nationally, at least.
Okay. Um, Anything else on your mind?
Uh, yeah, just some stuff related to Tesla.
Hmm.
I think the whole sentiment around estimates and what like the true market estimate is like kind of inaccurate. If I think Kalshi honestly does a really good job of pricing what the true interest for estimated deliveries is. And I just checked today, and their site does a bad job at predicting uh, how many will be forecasted. I saw like a month ago it dropped to like 200,000, but that's just because their algorithm can't calculate pricing correctly in the market. It's better to look at the individual markets. So, for example, if you look at Tesla's delivery this quarter, they have markets for basically each incremental of 10,000, starting at like 310,000. So, if you look at the market for 340,000 or more, 67% of people think there'll be more deliveries than that. But if you go to 350,000, only 36% of the market participants at Kalshi believe that that number will be more than 350. So that tells me that the true whisper number is probably like 345 or 347.
Okay. I mean, I don't think people are placing their bets on what Kalshi shows. I think the market in Kalshi, especially for Tesla stuff, is just extremely illiquid. So I don't really see it as a representative of the um, overall bull market. I mean, there are people. I mean, I have a coffee bet with somebody who thought that it was going to be more than 450,000 units, and this coffee
I
bet was
remember that.
placed like this coffee bet was played by like 6 weeks ago or something. So crazy. I'm like, what are you thinking? And I think it's going to be more around 350,000 this time. And I think the company compiled consensus or whatever they call it is something in this 370s. So I think it's going to be lower than expected. I don't know what the stock price will do, frankly, but I think it's going to be lower. I think the stock is worth at most $100 per share for various reasons. And I think Q2 will be worse than people expect, and I think this year and next year are going to be worse than people expect.
So yeah, that my whole point was just around the whisper number and estimates. I still think analyst estimates are too high, and I don't think there's. I know there's like some people in the Tesla community, especially 6 weeks ago or 8 weeks ago, that thought that there'd be a number above 400 or even 420,000. But as you rightfully pointed out, I think that's crazy. I think the like my estimates are around 340 or 345. So it will be interesting to see how the market reacts to if it's like let's say 345 or 350, which is where I think the estimate is at right now versus the actual consensus, what's posted on Wall Street and stuff is in like the 370s or 380s.
Yeah. The other thing about Tesla is right now, um, there is actually a bit of a bounce in vehicle demand overall in the industry, but this is disproportionately driven by demand increase for Toyotas and maybe a couple of other brands. And Tesla demand is like has like vanished. I mean, it's like gone, especially Model 3 demand, which is really surprising because the Model Y, like I don't know if you know this, but Tesla delayed the introduction of the lower price Model Y in the US. There's no Model Y long range or Model Y rear wheel drive yet in the US, even though China and Europe has that. And despite that, in the range of like about 20 to $40,000 Teslas, both in the new and used market, the demand is like not there at all. What do you make of that?
I think demand for the whole EV market has really surprised me. I thought, like a lot of other people, that EV demand would just kind of continually grow organically, like what we've seen in the Chinese markets and like Norway and things like that. Although Norway is more subsidized, so that's probably not as good an example. I thought the U.S. market would be delayed, but it would kind of follow China, where you see EV growth overall just kind of gradually grow year to year. And it seems like I don't know if it was related to COVID, but right around COVID time, 21, 22 is kind of when Tesla hit the peak as far as demand goes at whatever 1.8 million vehicles a year. And it doesn't seem like the broader EV market's growing at all in the United States. And in some scenarios, you could actually see that you could make an argument that it's declining a little bit. Um, and my bellwether for that is Rivian. Rivian's calling for flat to slightly down delivery growth this year or deliveries this year. So that kind of tells me that I don't think it's just a Tesla related issue. I think it's more of a US EV uh, American consumer type problem where you said before you think that they're more attracted to hybrids and stuff, which is probably true. I'm just kind of surprised that EV growth just hasn't been there, and Americans, for whatever reason, just don't want to switch over to EVs.
Yeah, man, CoreWave is now at $38 per share. This is a failed IPO if there was ever one. This is really insane. And this is not a small IPO, by the way. This is not a company that's like a few $100 million of an IPO or a couple $1 billion of an IPO. This company was supposed to be tens of billions of dollars worth, and it's plunging further at the open, despite the support from Nvidia. It's insane, insane. I don't think people are realizing how important this failed IPO is for the entire market. But let's go to Stephen again, and then sorry, Yutzi, and then Stephen first, and then Brian.
I was just gonna say, do you remember Meta's initial IPO back in 2012? I think it was May-ish timeframe of 2012. That was the last, like, what I'd call failed IPO, where their stock took I thought their stock was priced right around $40 a share when it opened, and I think within 3 months it was cut more than half. I want to say it was in the upper teens somewhere.
Yeah, this is
Um,
not going to take 3 months. This
so
company might be worthless.
I'd
Let's
say
go to.
Meta so far. Meta's. I was just gonna say I think Meta's IPO was so far worse than CoreWeave's has been.
Oh, okay. Stephen Farts and then Brian Miller.
Imam, what do you think of the odds that we see Optimus on the actual earnings sheet for Tesla for this upcoming call? Like, do you think they're going to show a few units produced? Maybe. Do we have any shot of that?
I don't think Optimus matters. I think people are really. Sorry, stay on me, please. I think people are really overestimating the near term of AI in general. It's not just an Optimus thing. It's also an FSD thing. It's also a ChatGPT thing. It's also an agentic AI thing, let alone robotics. So these models, AI models, whichever AI model you pick, is simply not reliable. Both Grok and ChatGPT yesterday thought President Trump was a former president. They did not even know it's the current president. I mean, how much of an IQ does it take to know that Trump is the president today? So, let alone that, like being able to read current news or whatever the fuck the problem is, I don't know, honestly. Let alone that, to say that people will trust these models to book their flight agentically is an asinine proposition. Because think about it, even if it's 99.9% accurate, that means these models would be booking the wrong flights for the human many times an hour. And you think airlines are going to agree to refund if the wrong flight is booked? You think that humans will trust these things overnight just because Sam Altman, or even worse, Elon Musk tells them that you can't trust them? It's not going to happen. Which means without agentic AI and this nonsensical reasoning models, mislabeled reasoning models, demand for GPUs is not there. Profitability for these models is not there. It's not going to be there for a long time. So if you can make an LLM useful to the point that hundreds of millions of people want to subscribe to it, and so you can make some money, then people aren't going to allow some humanoid to come into their house. It's just not going to happen. People are super slow about these things. So I don't care what advertising picture they put on their presentation. It doesn't matter. This stock is at $100 per share. Brian?
Hey, thanks. Yeah, I agree with you that adoption will be slower than expected. It's always that way versus the hype. But your comment that the LMM model is broken and won't be able to do airplane flights and whatnot means you just have a very limited understanding of how these things are constructed on the back end. And there aren't that many point solutions yet created off of the models. And so right now you're just dealing with the fact that you got one model covering everything, and that's why there are limitations on these models. Because when you're jumping into a Chat GPT or a Grok, you're dealing with a very wide model and not a point solution. Lots of point solutions are getting developed. All these kinds of issues go away. They're much more accurate. You can solve for these problems. So like just think back to if you were back to 2000 and you were like, oh my God, dial up, we're never going to get anywhere. You can't do anything. You can't get video. There's nothing's going to work. Like AI is going to be massive. But there are going to be so many bumps along the way. And so the hype's way ahead of the actual right now for sure. So like being an investor right now means you got to go with the story and not with the results. If you're trying to
So
be on
Brian, have
not
you
in the safer side.
talked in this space before? I don't
No,
remember yet though. Yeah,
no,
so
I have
first
not.
time speakers are limited to asking questions. Do you have a question?
My question is, how do you not understand the technology you're talking about? There, I'll
Okay.
drop down.
Okay, thanks. I mean, I explained why I think what I think. And also to think that Optimus is an adoption problem is asinine. Like, how stupid do you have to? I mean, I don't want to insult people honestly, but I'm really frustrated. I'm really frustrated. This is still a 0 to 1 problem. All we have is demo videos from Elon Musk, who has a history of over exaggerating progress in order to raise capital in the near term to fund his personal ambitions. Stephen?
Why are you frustrated? Do you believe that Tesla's going to do an equity raise soon?
I don't care what they do. Care. All right. I want to focus on what matters. Okay. S&P 500 is down more than 2%. Russell 2000 down 2.5%. Everything is down except for a handful of healthcare and utility stocks. Yeah. Man, you'd see Woolyard came up today and said something like probability of rate hike has increased. That is what that's crazy talk. But it just doesn't. I mean, I actually have a bet with somebody that the Fed will cut in May. I don't think they will, unless like this current fallout accelerates downward and we have like 20-30% down S&P 500 in April. In that case, obviously they would kind of step in and make a cut or whatever, but and it wouldn't be a one cut. You two, what do you think?
I was going to ask you, what do you think the Fed? I got to leave here in a few minutes, but what do you think the Fed should do? What do you think the Fed will do? Kind of, and like, what's your predictions for how some of the stuff is going to shake out in April?
I think that this decline will accelerate and that they will end up cutting rates soon and maybe even May. But I don't think they should cut, and I don't think they will cut before there's some sort of a catastrophe. I think that this CoreWeave IPO could be the final nail in the coffin of the AI bubble. What do you think?
I wanted to just follow up on that answer there. Why do you think that the Fed should, like, if you expect the market and the economy and stuff to continue to deteriorate, why don't you think the Fed should cut?
Because I think the current market valuation don't reflect the underlying fundamentals of the real economy. Today we have an unemployment rate that is lower than the non-accelerating inflation rate of unemployment. And if they cut early, it could lead to an acceleration in inflation. And we are on the brink of that happening. Like, look at these inflation expectations. They are surging. And even if you accept the Fed's viewpoint, which I think is the wrong viewpoint to have, but that is near-term survey-based inflation expectations, you can look through them. Even if you accept that, I think they're underestimating the probability of long-term inflation expectations getting like not being well anchored. So I think they're on thin ice here. They're on thin ice. If they at all take a step towards cutting, as markets expect in May, without unemployment rate basically jumping up like 1% or 2%, it could lead to a price wage spiral. So I don't think they should, and I don't think they will cut rates at this time. Something's got to change. Something has to change. The underlying pressure is just too much. And you look at, go ahead.
I was just going to say, I feel like I agree kind of with your sentiment that you don't think you don't think they will cut, and you don't think they should cut. Like if you're Fed president, you're saying that you wouldn't cut rates right now. And obviously you can't predict the future, but as of this point, you wouldn't plan on cutting rates in May then either.
Yeah, exactly. Um,
And I guess maybe just one quick follow-up. I think you do bring up a good point that the Fed needs to be really careful that long-term expectations for interest rates stay well anchored. And that's why I think that the probability of a hike is maybe a little bit more elevated now than what it was 60 days ago or 90 days ago. Because the last thing the Fed wants to do is cut rates now and see the long end of the curve explode higher. That'd be really
right,
bad. And that's what I
right,
think.
exactly.
And that's been one of my concerns is that I think the Fed has always put the 2% inflation not as a target but as a floor, and so that's why I think there's a chance that we still see 5% yields on the 10-year. So I want to quickly ask you too what your thoughts were on what you expect where you expect the 10-year yield to go from here, kind of the next 2 to 3
Yeah.
months.
Yeah, someone said that today. I was watching an interview either last night or this morning or something. Someone said that the yields could go higher to 5%. And if I think you have a view that the macroeconomy is stronger than what I think it is fundamentally, like underlying dynamics. If I agreed with you, then yes, I think we would see a 10-year yield at 5%. But I don't think the market can sustain even current long-term yields. I'm already starting to see some dislocations. Now, these are preliminary indications, like we talked this last time. They may reverse, like I said last time. But despite a slightly more dovish Fed in the last meeting, the fundamentals that I'm watching have gotten worse. So it may be because of kind of this tariff uncertainty or whatever, but I don't think that's the case. It may be because of some weather impacts or whatever. I don't think that's the case. I've actually looked into both of those things, and I've ruled out both of those as the potential reason why consumer spending is so low and deteriorating. I think there are other reasons why these things are happening, and I don't see them changing anytime soon. If anything, they're going to get worse as time goes on. So, um, yeah. So, all right, go ahead.
So if you had to kind of balance, on one hand, you have recession risks and things like that. On the other hand, you have inflation risks. Are you saying you see a scenario where you could have inflation, not just stagflation, but inflation rise while unemployment and stuff rises too? Like, how do you put the balance of risk? Is that why you say rates should stay flat? I'm just trying to understand a little bit more of your thesis on one hand, you expect the economy to continue to weaken, but on the other hand, you've been talking about inflation expectations, like kind of rising and things like that.
Well, the connection between the two is my view of downside risk is higher than the market's view, whereas on the inflation side, the market's view is higher than mine. So, and the Fed doesn't care about my view. The Fed cares about market's view. So that's why. All right. Let me just read this Reuters, man. Let me just read this Reuters article real quick. Let's do a market check. Things are moving really fast here today. Thanks, man. Thanks for stopping by. I appreciate that. All right, take care. Dow Jones down 2%, Nasdaq down 3%, S&P 500 down 2%, Russell 2000 down 2.5%. Let's do our regular review here. Actually, before that, CRWB. CoreWeave IPO right now is below $38 per share. It actually hit $37.50, which is really stunning. I mean, this is a failed IPO by any metric you look at. Curious to see how it's going to end up today. Curious to see. So let's read this article. Wall Street's primary indices fell sharply on Friday as data underscored underlying price pressures, stoking fears that the Trump administration's tariff maneuvers could further exacerbate inflationary trends. A Commerce Department report showed the personal consumption expenses price index rose in line with expectations. It was actually higher than expected. The Reuters tariff watch newsletter is blah, blah, blah. However, excluding volatile items such as food and energy, the index rose more than expected on an annual basis in the previous month, while consumer spending rebounded after falling in January. Adding to the unease, final figures released by the University of Michigan showed consumer sentiment deteriorated further in March. Equities have experienced significant declines over the past month, driven by concerns that President Trump's wavering policies might steer the economy towards a period of heightened inflation and tepid growth, potentially complicating the Fed's monetary policy trajectory. No shit. The problem is we don't know the rules on businesses that really struggle with that, said Bob Dole, CEO of Crossmark Investments. Part of the economic weakness we're experiencing and likely to see more is a function of individuals and businesses saying, I'm not quite sure what tomorrow is going to bring, so I'll just be a little more cautious. An index tracking rate-sensitive banks fell over 2%. Traders continue to expect that the Fed will trim borrowing costs by 25 basis points for the first time this year in July, as reflected in data compiled by LSEG. A report noted that policymaker Mary Daly still views 2 interest rate cuts this year as a reasonable expectation. Wow. Mary Daly. Okay, we're going to go into that in a second. I believe that's San Francisco. Let me see. Yep. Trump's steadfast commitment to 25% tariff on auto imports set to take effect next week weighed on auto stocks for the second day, with GM and Ford falling over 2% each. Attention now turns to a fresh round of tariffs the U.S. intends to unveil on April 2, with Trump hinting that these measures might diverge from the straightforward tit-for-tat duties previously pledged. Simultaneously, a report indicated that EU is weighing concessions for Trump following the enactment of reciprocal tariffs. VIX rose 2 points to 1 week high. Lululemon was the latest to lower annual forecast, citing unpredictability surrounding tariffs. Shares of the sportswear maker plunged 15%, dragging the consumer discretionary sector down by more than 2.5%. On the flip side, bullion miners Harmony Gold and Gold Fields jumped 9% and 6% respectively on higher gold prices, as investors flocked to safe haven assets. S&P 500 is facing its first, this is also interesting that gold prices are rising, yet Bitcoin is falling. So this idea that Bitcoin is digital gold is out the door now. Bitcoin is just a speculative asset, basically. On the flip side, we talked about that, S&P 500 is facing its first quarterly decline in 6 quarters, while the tech-centric NASDAQ braces for its most significant quarterly drop in nearly 2 years. UBS was the latest brokerage to lower its year-end target, blah, blah, blah. Investors will also scrutinize speeches by Fed policymakers Michael Barr and Raphael Bostic later today. Oh, interesting. I didn't know they were talking. Wolf Speed shares slumped by about 48%, hitting their lowest since 1998, a day after chipmaker appointed a new CEO amid its struggles to improve its financial position. Declining, that's coming to a GPU maker near you. Declining issues outnumbered, advanced by 3-1 on NYSE, 4-1 on NASDAQ. Cool. Tesla is down 4%. Let's read this. Yeah, I'll do it on my. Any other questions, comments? Please request to speak. Otherwise, we're going to call it a day. Happy Friday, everybody. Hope you enjoy your weekends. I'm gonna wait 5-10 seconds until someone requests to speak. Otherwise, we'll call it a day. Great. Thank you very much, everybody, and I'll chat with you all next time. Take care.